Hi traders, and welcome to the technical analysis market wrap on Friday the 11th of December. So I've seen some big moves continue this week. Some of the majors have really broken through. The Aussie USD has made its highest mark in nearly 2 years, and the EURUSD has reached its highest mark in nearly 3 years. So we'll jump straight into the charts and see what we can identify for today's trading and early next week. We'll start out here with the Aussie USD. This has been a real eye-catcher. You can see that it's had a good series of high highs and high lows that we've been talking about for weeks now. And it came back and retested this recent high there. It did the role reversal that we're always looking for. And, you know, look, on the smaller time frames, it looked like it was starting to weaken a little bit. Even yesterday, we had a look at this, and at this point here, you could see that it made a peak and it looked like it was struggling to actually get to a new high again. And, you know, at that point there, I was actually thinking that it might actually start to go short or at least retest the 74 level. But the clue that we got was when it hit the 20 moving average and it actually started to spike up. And this candle here, you know, really started to show that it was actually going to push up to the new high. Once it did that, at this candle here, when it closed actually above this previous high, that was your signal to go. Once you see that, you know, even though here it looks a little bit weak, once price reversed off the 20 and this candle closed above the previous resistance here that you can see there, that was a signal to go. And this was really ramping up last night during the US session. You can see it's really pushing up high. The MACD still looks like it's got plenty in it. It's turned around fairly quickly. So, you know, where this can go now, I guess it's anyone's guess, really. Like, you can see here that the recent, it's already reached a point where it had previous support way back in September and November of 17. You can see here that was a pretty strong support zone. It's right there now. So, you know, whether it stops there or not, it probably will take a little bit of a pause. This is, you know, support from a very long time ago. So it's a little bit hard to read as to whether it will actually, you know, continue to move up without respecting that support. But probably play the short game on this one. You've got to go to the smaller time frames to look for the clues. And that's where we got the clue to actually take this one long. So what you're looking for is a change of trend now. It needs to, we know that we are at resistance, even though it was resistance from a long time ago. So we need to be looking at this like, is it going to pull back to the 20 again and play the short game? It is very difficult to trade in a direction when it's setting new highs or new recent highs, you know, with any sort of confidence. So it's really good to play the short game. If it's going to go long, prolonged long, it's probably going to have to come back and test the 20 at some point again, at least on the 1 hour. So I would be looking for it to potentially find resistance at that level and maybe short down to the 20 moving average on the daily. But there's no saying that it's actually going to stop there, and it may certainly come back down and push up and make new highs again and start pushing up. So look for the smaller trades. The best way to do this sometimes is to actually draw the level where you think it's going to go. Now, at this point, it's going to be, yeah, that's 75, which is only 30 pips away. It's a bit of a scalp. But then you go to the smaller time frames, you go deep down again, and you look for a very small change of trend. Price is everything, okay? When you're looking at the price action, if it does change on a 15-minute, yeah, this is a likely target. It's going to pull back down to the 75, and then you know that it's at the 20 on the 1 hour. Okay, it'll be pretty much there by the time that reaches the 75 zone. And if it does that, yeah, then you're looking for longs again. So it's absolutely scalping on this one, but there's nothing wrong with that. It's been providing really good scalping opportunities for quite some time now, the Aussie, so there's no reason to think that it's not going to continue. So really good trading there. So the next one we'll have a look at is the US dollar CAD. This one just has broken down to the low. You can see on the smaller time frames, it was promising to, you know, potentially push up again and, you know, try and get to that 129 to 130 area, but it broke down last night, and yeah, it really did shoot through the bottom here. It's definitely made a very significant low now. You really have to go to a bigger time frame to appreciate how low this actually is now. You can see that it's broken a very significant low at that level, and the MACD is looking very ominous for the continuation of the short. So, yeah, on that information, all you can do really with this one is, yeah, pretty much trade the moving averages. I really like to do that. Now it's broken out of this channel. It's created a new zone for it to retest. So I would be looking for price to potentially reach up to the 20 moving average here on the 1 hour and the 127 sort of 80 area. If it reaches up there, I'd be looking for the reversal. I've got, you know, no real intention of taking this one long unless price action really changes around here. Like, it's not gonna, it's not looking long in any way, shape or form. So, yeah, we would only be looking for the shorting opportunities. Wait for it to get to this level here, And if it does, then we'll be able to look for shorts and continue this for a bigger run down. It's been a really interesting one. You know, I would be surprised now if it goes to the 130. This level really had to hold, and it failed to do so. So now I'd be looking for the roll reversal. The retest from the bottom would be a pretty significant retest, and then we'll be looking for shorts on it. The reason why I'm looking at the 1 hour on a lot of these for scalps is because it's generally the one where I get the most guidance for scalping opportunities, even if they're shorter term ones, like on a 15-minute chart. It's the 1 hour that it's going to be the most relevant for your scalp. So it's really good to get your top-down approach working from a daily down to a 4 hour. But the 1 hour gives us the biggest clues for the scalp, and the 15-minute is often the entry. So that's why I set my levels on the 1 hour and then look for the entry points on the 15-minute when I'm actually doing the scalps on these types of trades. So we'll move on now to the dollar index. We'll get some guidance from here as to what's happening with the dollar-based pairs. Look, we've got a little bit of weakness, not quite as weak as the CAD was, but you can see here that it's definitely it's starting to go sideways now, but it's had a pretty reasonable move down. I would expect that this has to touch the 20 at some point. I'd be thinking that it's probably going to pull back to around the 20. I wouldn't necessarily trade this. I think there are better trades to be had based on what this one's doing, but it's definitely there. We're looking for the 20 moving average touch. If it gets up there, once again, you're looking for the area just around here. Because you got to remember that the 20 moving average is going to move down a little bit further. So around that 91.40 area is probably your first target. You go to the smaller time frames, and if you see a series of higher highs and higher lows and a break above the moving averages, well, it might give you an opportunity to trade it. But more than likely, I like to use this one as a guide at the moment. It's not very tradable. I don't think it's a great trade at the moment. So use it as a bit of a guide as to what may happen. And if you want to trade the action, just go to the euro. The euro is the one which we'll look at in a second that you can actually actively trade with very, very low spreads. And it's basically doing the inverse of what the dollar index is doing anyway. So we'll jump into that one now. So you can see here, we'll go to the daily chart straight up. Very similar picture to the Aussie USD, really. It's broken out of the channel. It's gone up and broken the 120 quite significantly. It's come back down and retested this level around that sort of 120.55. I thought it might come back all the way to the 120, but it failed to do so. It's so strong that it seems to have pulled off that. It's hard to say whether it will come back now. It probably, look, it's showing a little bit more weakness. I think that the real zone here is the 120. I think if it came back to the 120 and the 20 moving average then on the daily would actually catch up, and that would provide a very, very strong support zone. Then you've got three really good reasons to actually long it from that zone. You've got the 120 psychological level, you've got the previous resistance, which should now be support, but also you'll have the 20 moving average that'll be pretty much there if it does come down in the next few days, because that moving average should creep up and get up there in time. That's probably the ideal trade. If it goes from here, well, look, that's okay as well. But you've got to go from to a smaller time frame to actually try and identify that opportunity. So if we go down to a 1 hour here, you can see it's been a little bit sideways. Difficult to trade on the 1 hour up until this level. So it was good over here. You could see that it was pulling off the 20 every time. Gave us some really good opportunities. So that was great earlier in the week. But now you can see that it's a little bit of a flat line action happening on the 1 hour. So if you want to trade this one, it needs to come back for us, really. If it makes a series of lower highs and lower lows on a 15-minute chart, you can bet your bottom dollar this is where it's aiming for. It's going to be the 120.50 or the 120 if there's enough power. But at that level there, it's purely a scalp. There's no worries about that, because you wouldn't want to be going for too many longer trades than that, because I think the 120 is going to be extraordinary support for it if it gets there. So, and that's when you're going to be looking for the reversal and looking for the long opportunities from there, because this is starting to trend up now, just like the Aussie. They've broken very, very key zones, and they're more than likely going to be trading in that direction. So look for the price action. Sure, failing that, if it doesn't pull back, you got to look for new highs now. So you look for a series of higher highs and higher lows on the 1 hour. That's what you need to be looking for now. If it breaks above this level here, which is around that 21.80 area, if we get a break above there on a significant time frame, like say the 1 hour or the 4 hour, you would think that it's probably going to go a fair bit longer. Like I said earlier, this is reaching its highest point in 3 years now. It's been nearly, I think, December of 17 that it was this high. So now that it's broken out of these zones, there's no telling that how far it can go. And we're not going to try and stop it. All we're going to do is work with this trend. We want to look for the trending opportunities and see if we can get involved. And the best way to do that is use price action on the smaller time frames and see if we can catch the parts of the trend that are starting to move, or the reversals when it does come back to a key zone. All right, so the last one we'll have a look at today is the S&P 500. So it's had a week of fairly weak movements. You can see here that our last three candles, or the last two in particular, have been a little bit bearish. It looks like it's starting to get a little bit tired at this level. I mean, this is like it's starting to reach all-time highs again. So yeah, it's difficult to predict, how high it can go, given that there's a lot of fundamentals, surrounding this as well. It's not just technicals. There's a lot going on in the US, and I think it's finding its feet sort of around this level. I would be looking for the really short time frame. This is not my favorite trade at the moment because it's reached a really high point. Very difficult to long at this level, given that it is at all-time highs or pretty much. And, there is a lot going on that we have, no control or power over, obviously. And technicals aren't the only things running the show here. So, in my mind, it's difficult to long, but if you're looking for the shorting opportunities, you've got to go for those zones. You can see here, even on a 15-minute, it's been flat as attack, very, very difficult to trade. So it's probably more a wait and see on this one. I think it needs to do, something, and I think that something is probably going to be a pullback. Generally, we get a Christmas rush. I'm not so sure we're going to get it this year. I think it's already probably happened. It's hard to imagine a Christmas rush happening, when it's at pretty much all-time highs, especially after we've had a pretty good run. We haven't had the pullback we generally get, so maybe that pullback's going to come before Christmas. The logical zone for this to come back to is the 35.50 area, which is still a good way away. It's about 110 points away from the current level, so I'd be looking for smaller time frames. Changing the trend. If it breaks the 20 here on the daily, I'd be looking for the shorts. This is a logical level. It'll be, it's definitely going to be some sort of support here. It's got resistance over at these two levels here, and it's got the 50 moving average catching it as well. So if it happens in an orderly fashion and comes down today, or in the next couple of trading sessions, there could be some good opportunities on the smaller time frames. For that to happen, obviously we're going to have to see a series of lower highs and lower lows on 15-minute. That's where it's all going to start. So if we get a 15-minute break below this level here, which is around the 36.40, if we get a break below there, I'd be starting to look for the shorts and start to aim for that 100-point move down, because that's the easy trade. It's far easier than going the long because there's a lot of resistance in front of it now. But the support at the 35.50 area is pretty good, and it could bring the price down to it like a bit of a magnet, and it will gravitate down there. So you get involved with that if we get the series of lower highs and lower lows that we want below the 36.40. Okay, so I hope everybody's had a great week's trading. We've had some really good opportunities. The markets are behaving in a very orderly fashion at the moment, which is really good. The moves are very concise, and basically they're going to the levels that we're always talking about, and the short and sharps are working very, very well. So hopefully you've been able to get hold of some of those. Good luck if you're trading today, and I look forward to seeing you next week for pretty much the last week of technical analysis for December in 2020. Thanks everyone, and have a great weekend.